So all of you, good morning and welcome back to economics class. This is session number 1 of the day. Okay, only one session is there today. So far, we know that we discussed about various aspects related with the national income accounting, Okay, so I try to make you understand some words familiar, right or not? Okay, example, what are the different types of goods? Clear? What is the difference between the domestic and the national income? Clear or not? Okay, so such concepts you should understand it clearly, understand that ideas clearly. Clear? Because in this chapter there are various calculations are there. That time we want to know what want to include and what want to exclude. Leave in that kind of calculations there. Okay, so these concepts are very much important for you, so always read the note and understand that. Okay, clear or not? So every day I am telling you people to write the notes properly. The same time the slide also is here, so learn from that and the same time write it and keep with you. Don't leave such kind of things there. Those informations are very much important. Clear or not? Clear or not? Okay, so today we are moving to discuss some important aspect about different methods of calculating the national income. What are the three methods of calculating the national income in India? What are the three methods to calculate the national income?
Expenditure method,
Yeah, expenditure method,
income method,
income method, and the third one,
product method.
product method. Okay, learn it properly. There are three methods are there. Okay, related with that circular flow of income. With the help of the diagram we learned that there are three methods. One is the income method, other is the expenditure method. Income method and expenditure method. Next one it is product method or value added method. Product method or a value added method. These are the three methods basically using by the economists to calculate the national income. The national income, is that clear? Okay, don't forget that. Okay, so it is too important for us. Okay, so just check in your notes there. This slide is we discussed already, right? Check it. Check this one. Completed. Okay, methods of calculating national income. Okay, here you know that the first method already we discussed. It is the product method, or otherwise termed as the value added method. Product method or a value added method. What are the formulas to find out that? Here it is. So some ideas. Okay, so sales plus change in the stock is equal to value of output. You not wrote that, right? Right, wrote or not? Check in your notes there.
No, sir.
No. Okay. Please check that relation between national product and domestic product. Well completed. Right?
Yes, sir.
Yes. Okay. So this is the last slide we discussed the last class. In the last class. Okay. The difference between national product and domestic product. So do you can you say that what is the difference between the national product and domestic product? What is the difference here? Or what is the similarities? The similarities are there. Check it in your notes and tell me. All of you, Amalraj, Pavitra, Shubham, Muhammad Irfan, Grishma, Tomlin, Anjo, turn on your cameras. Tell me, what is the difference, your basic difference here? One is national product, other is the domestic product. Hmm?
Domestic product concept is based on within the domestic territory.
Yeah, of course, the term is important. The production within the territory of the country, geographical territory of the country, clear or not? But national income is, see here, domestic product concept is based on the production units located within the domestic territory. Okay, clear or not? The same time, national product is equal to domestic product plus residents' contribution to production outside the economic territory. Clear or not? The residents of India, okay, basically NRIs, non-residential Indians, they are working abroad, right? That people, they will send money back to India, right or not? Okay, they will receive anyway factor income, right or not? Or employees compensation, okay, and they will send that to India. minus non-resident contribution to production inside economic territory, that is factor income to abroad. This is the last concept we discussed. Clear? Okay, what is that? What is that? Example, national product is equal to domestic product, the product within the territory of the country, plus residents' contribution to the production outside the economic territory of the country. Okay, the money that received by the Indian, those who are working abroad, minus, okay, minus the money that what we are sending to abroad. We are in the sense, okay, non-resident contribution, number of other people from other countries, they are working in India. Anyway, they also receives what? Salary or factor income, and they will send that to their own countries, right? Okay, so that difference you have to calculate. Clear? So that's what national product. National product. It is connected with the money that going to other country, or it is coming to our country. Clear or not? Related with the factor income or employees compensation. Employees compensation. Clear? Okay, this idea it should be there with you. Okay, so moving forward, methods of calculation of national income. So there are three methods are there. We already discussed that. It is the product method, or else you can say that value added method, product method or the value added method. Related with this, we have already explained an example. We discussed an example. Okay, the wheat farmer, the miller, and the hotelier. Remembering that? Remembering that? Okay, only we will take the final value. Only the final value we will use to calculate national income through this method there. Okay, so write down. Okay, product method or value added method. First point, sales plus change in the stock is equal to value of output. Value of output. Okay, sales plus a change in the stock. Change in the stock is equal to value of output. Now, what is this change in the stock? Change in the stock. So we already know that the two concepts, what are they? The concept of stock and the concept of flow. You know that, right? Yes or no? So what is change in the stock here? That is equal to closing stock minus opening stock. Closing stock in a particular accounting year minus opening stock of the next accounting year, right? Yes or no? Or the same accounting year? Hmm? So closing stock of the accounting year minus opening stock of that particular accounting year. Okay, so that's it. Second point. Third point, value of output minus intermediate consumption is equal to gross value added. Another concept for us. Value of output minus intermediate consumption is equal to gross value added. So intermediate consumption. What is this intermediate consumption? Okay, wheat that used by the miller, for him wheat is a intermediary good to produce the finished good, right? Yes or no? For the farmer, it is a finished good. Clear or not? For the farmer, it is a finished good. Wheat is a finished good. But the miller purchased this wheat from the farmer, so it is an intermediary good for him, right? Yes or no? Okay, and he produced another good. What is that? The wheat flour. Got. Okay. And the same time, the hotelier purchased the wheat flour from the miller. So that is an intermediary good for him because he want to make porota with that or chapatis with that. That is the final good. That is the final good. Is that a clear? So write down what is that? Value of output minus intermediate consumption. Intermediate consumption is equal to gross value added. Gross value added. So we know that the idea of gross value, right? So just go back to your notes there and check the difference between these two ideas, net and gross. Net and gross. Okay. Okay, so value of output minus intermediate consumption, that is equal to gross value added. That is for GDPMP, gross domestic product for market price. Gross domestic product for a market price. Clear? So gross value added, otherwise it is termed as gross domestic product for the market price. So concept is here, this is D, domestic. Clear? Domestic. Okay, gross domestic product for the market price. Market price. Okay. Next one, NNPFC. NNPFC, factor cost. Net national product for factor cost is equal to GDP for market price, GDP MP minus consumption of fixed capital, or else it is termed as depreciation. Okay, consumption of fixed capital is otherwise termed as a depreciation. How can? Okay, how can we call the consumption of capital good as depreciation? What is the consumption of capital good? We know that capital good means the good that we purchased and we are using that for a long period of time. Clear or not? It's a durable one, right or not? Maybe a factory building or a machinery. Clear? Then what is the consumption of these things there? Basically, we know that if you are losing that for a long period of time, what is that? Due to wear and tear, okay, we want to replace it or we have to repair that. Clear? So we want to spend money on that. Clear? Okay, so that's what depreciation here. Okay, so write down. Okay, NNP for factor cost, net national product for factor cost is equal to GDP-MP minus consumption of fixed capital depreciation, or else it is termed as depreciation. Okay, clear? Okay, so here two one minus sign is there, right? Clear or not? Minus sign is mentioned here, and one plus sign also mentioned here. Okay, plus what do you want to add with this one? Net factor income from abroad. Okay, so for the national income, what do you want to add there? Net factor income from the abroad also want to add along with that. What do you mean net factor income? So we know that we Indians, they are started number of companies or numerous companies in other countries. Definitely they will receive the factor income. Clear or not? Okay, for their what? Capital investment or entrepreneurship. Okay, definitely they will get the money back. Okay, their remuneration back. So that also want to add here. Okay, minus net indirect taxes. Net indirect tax. We have to reduce the net
Sir,
indirect tax. What Chubambal? Any doubt?
we have to minus if it is net factor income to abroad.
Add it. Net factor income from hello. 1 minute. Hello. Can you hear me? Hello.
Yes, sir.
Yeah. Okay. So write it. Completed. Okay. Next, income method. Income method. So income method is basically related with the compensation of employees. We know that it is wages, right? Compensation of employees, it is wages, right? Yes or no? Wages or salary, we can say that. Okay. And we will add the compensation of employees and we will use the operating surplus. Operating surplus. Right. Clear or not? So what do you mean operating surplus? What is that operating surplus? Simply speaking, so the remuneration. Hello, hello.
Yes, sir.
Okay, thank you. Okay, operating surplus. Okay, that is income from the property, factors of production. Okay, clear or not? Or income from the entrepreneurship, income from the property or income from the entrepreneurship. So income from the property, that is what? Rent and royalty. Rent, royalty, and interest for capital investment. Interest for capital investment. Okay, write on that. Operating surplus, that is income from the property. Okay, rent and royalty, interest for the capital investment. Interest for the capital investment. Okay, clear or not? Is that idea clear? So in income method, two components are there. One is compensation of the employees, I mean the wages. Next one, operating surplus. Operating surplus means nothing but income from the property. That is, what is that income from the property? What is that? Rent only, right? Yes or no? So what are the factors of production and what are the remuneration for these factors of production? Number of times we discussed that. Okay, clear. So income from the property is nothing but it is rent. Royalty, what is royalty? What is royalty?
Remuneration for
It's the remuneration for what?
technology.
Technology. It's a remuneration for technology. So royalty is a remuneration for a technology. Next one, interest. Remuneration for? Interest is a remuneration for capital investment. Capital investment. Clear? Okay, so keep that idea in your mind. Next one, income from the entrepreneurship. Income from the entrepreneurship. So we know that it is profit, right? Or what? Or what?
Loss.
Loss.
Loss. Okay, so here only mention profit, but profit is only after paying all these things. Clear or not? Clear. So profit after paying the corporate tax. What do you mean corporate tax? Corporate tax. There are two types of basic direct taxes are there. Okay, one is the income tax, the other is the corporate tax. What is that? One is the income tax, the other is the corporate tax. Please write down that. Write down there. So for individuals, write down. For individuals, government will collect. Government will collect proportionate income tax. Proportionate income tax. Proportionate income tax. Okay, proportionate income tax. And from the firms, and from the firms, and from the firms, government collects, government collects progressive corporate tax. Progressive corporate tax. Progressive corporate tax. Okay. Both these taxes are examples of direct taxes or direct tax. Direct tax. Clear? So profit is the money that received or earned by the entrepreneur only after paying the corporate tax to the government. Okay. Corporate saving. Corporate saving. Definitely, the company want to save a percentage of their income for the next round of production, right? Yes or no? They cannot utilize all these profit for their own, what you can say, or they're on improving the standard of living or something like that. They cannot do like that. So they have to say for the next round production. It's called to be corporate saving. Dividends. Dividend. Remember dividend? Number of other individuals also might invested their company, right or not? They have to distribute a share of profit to them also. Clear? A share of profit to other investors. Other investors. Clear? Okay, so profit is only we can calculate if you paying all these things there. Okay, corporate taxes are there, corporate savings are there, and dividends. Clear? Right down. Is that clear or not? Okay, so in income method, two components are there. We are basically using to calculate. One is the compensation to the employees.
So we can't hear you clearly.
Hello. Hello. Hello.
Yes, sir.
Can you hear me now? Okay. So by mistake, I just changed the location of my microphone. Okay. So that's what. Is it okay now? Hello.
Yes, sir.
Okay. Write down. Everyone, please write down. Okay. Can I go to the next slide? Okay. Moving forward.
So one doubt.
Yes.
This income from entrepreneurship, is this also a part of operating surplus?
Pardon? Yeah. Income from the entrepreneurship. Okay. Entrepreneurship means it is the another factor. What is that? Organizer. Right or not? Right or not? So here compensation of employees, first factor. What is that? Labor. Right? Labor. Okay. Again, next three factors are there. Right? What are they? Land, capital investment, organizer, then one extra. What is that? Technology. Okay. So income from property, we give it is what? Rent. Royalty, we know that it is for the technology. Interest, we know that it is for the capital. And for the entrepreneurship, what is that? Profit is left. Clear or not? But before calculating the profit, okay, all these things are there. Okay, only after paying we are able to calculate the profit, the real profit, okay, of a entrepreneurship or of enterprise. First of all, they have to pay the corporate tax, they have to save some money for the next round production, and finally the dividend, the share of profit you want to provide it to the other investors also, right? Right. So it's a part of operating surplus. Operating surplus. Clear? Clear.
Sir, one
Now
more
all
thing
the
is
four factors came here, right? What are they? Labor is there, land is there, organizer is there, capital investment is there, plus technology also. Clear. Shubham.
sir, one more thing is there now.
Ah, what is that?
Mixed income.
Mixed income from
Uh,
self-employment, right? Yeah, that's it. Mixed income from self-employment. Okay, I will tell you. So first understand this one, okay? Clear.
yes, sir.
These ideas are clear. It is mixed
Yes, sir.
income from the self-employment. I will tell you. Okay, so just to write all these things now. Moving forward. Next one, mixed income from or of self-employed. Okay, so Pampal, happy with that?
No, sir, my sister taught me every
Yeah,
method.
yeah, fine. So that also important. It's a third component. Okay, mixed income from a self-employed. Okay, clear. So write down NNPFC, net national product for FC factor cost is equal to is equal to is equal to NDPFC, net domestic product for factor cost, plus net factor income from abroad, net factor income from abroad, net factor income from abroad, net factor income from abroad. Next one, GNPMP. These equations are important. I already told you that. Learn it properly. GNPMP, gross national product for market price, is equal to NDP, net domestic product for factor cost, plus Consumption of fixed capital plus net indirect tax. Consumption of fixed capital plus net indirect tax. Net indirect tax. So already we wrote, I think so. What do you mean this net indirect tax? What is that? That is indirect tax minus the subsidy. Clear? Indirect tax minus subsidy. You already wrote that. Okay. Please check that one more time. Again, no need to write. If any equation is repeating, no need to write then. Okay. So that's what the mixed income of the self-employed also coming under the income method. Income method. Clear? Okay. So completed? Completed or not? Come on, tell me. Aditya completed?
Yes, sir.
Okay. What about Anjo? Anjo, going forward. The third method is expenditure method. Third method is the expenditure method. Okay. Here, there are four components are there. Four components are there. First of all, government final consumption expenditure. Government final consumption expenditure. Okay. So my question is government spending anything or government purchasing anything from the private individuals? Tell me. The government of the country is purchasing, for example, the Indian government. The Indian government is purchasing something from the private individuals within the country. Are they purchasing or not? Huh? What Amal Raj, tell me. Amal Raj, no idea. My question is, just think and tell me, is the government of India purchasing any goods from the private individuals? Yes or no?
Yes.
Yes. I should have told yes. Again, one more variable is there, one more answer is there with you people. That is no. Okay, how many of you are able to say no for this one? Okay, the answer is one more chance to everyone. The answer is yes, of course. Yes, of course. Okay, the government of India purchasing the products from the private individuals. Okay, what they are purchasing? Anyway, the government of India want to come to our kitchen and ask us to give the food or something like that. What they will purchase actually? They will purchase grain from the farmers, right? Yes or no? So they will purchase the implements or the machines that made by different capital good industry that running in the private sector. The government industries need machines, right or not? Will they purchase it or not? Definitely they will purchase. Okay, why the government of India want to purchase this grain from the farmers? We know that it is called the PDS system, public distribution system, the ration shops. Government want to provide the food grains for the poor people, right or not? Or for everyone, clear or not? So government want to purchase these things from the private individual because government is not producing any food grains there. So they want to purchase it, clear? So such kind of purchase of the government, okay, termed as the government's final consumption expenditure. Consumption expenditure, clear or not? Government's final consumption expenditure. Private final consumption expenditure. Private final consumption expenditure. Even the private individuals also will purchase the product from different countries. Okay. Next one, net export. Net export. Okay. What do you mean net export? Net export. The difference between the export and import. Okay, export minus import. Write down. Net export. Net export. Next one, gross domestic capital formation. Gross domestic capital formation. Gross domestic capital formation. Okay, capital formation within the country. Capital formation within the country's territory. Gross domestic capital formation. So stock concept, right? Write down all these four components. So net exports means nothing but the difference between the export and import. Difference between export and import. Completed. Okay. So I know that these concepts are not that much easy for you people. Clear or not? Okay. National income accounting. It's a what we can say that it's a Himalayan task actually for understanding all these things in a proper way. Clear? Clear. So these are the base things you are learning this year. Clear? So for the further understanding, the things that what you wrote already, you have to learn that thoroughly and properly, How a mathematical, what you can say, a multiplication table is important for a student, those who learning mathematics. Okay, for a student of economics, these equations and formulas are that much important, important. Please don't neglect it to learn that. I mean, learn it properly, No need to neglect. Okay, next. Calculation of national disposable income. Disposable income. So what do you mean disposable income? With a real thing for our use, real thing that available for our consumption is called to be disposable income. So for example, I can say that disposable income means nothing but, okay, disposable income is nothing but, okay. So we already discussed about a two-sector model, right? One is with the intervention of the government or without the intervention of the government. So if there is no government intervention, money that what we received, we are able to use that 100%, right? 100%. So example, 100 rupees we earned, that 100 rupees also we are able to spend. Clear? But if the government intervention is there, means what will happen? What will happen?
Taxes will be there.
Of course, that's the thing there. Taxes will be there, right or not? Taxes will be there. So we have to pay taxes. Are you pay taxes regularly? Are you guys are paying taxes regularly? So don't think that you are going to the income tax department and paying taxes to them. Okay. So purchasing each and every product from the market, we are paying taxes indirectly to the government. Clear or not? There are different cesses are there, different indirect taxes are there. Regularly, we are paying that. Clear or not? If you are purchasing a chocolate, that time we can say that, yeah, myself, I pay tax to the government. Of course. Okay, we are paying taxes. Clear? Clear? So disposable income is nothing but the real income minus the taxes. What I write down there? What do you mean disposable income? Real income, sorry, income minus taxes. Income minus taxes. That the disposable income. Income minus taxes. That is the disposable income. Disposable income. So that only we are able to use. That only we are able to spend. Clear? Clear? Okay, so just write down. National disposable income. National disposable income. Calculation of national disposable income. Okay, so it is the income from all sources. It is the income from all sources in bracket. The income earned as well as transfer payment from abroad. Okay, earned income as well as transfer payment from abroad. Earned income as well as transfer payment from abroad. Okay. Available to resident of a country, available to residents of a country for consumption expenditure, for consumption expenditure, for consumption. Okay. Anyway, for consumption means you have to spend money. That's what for consumption expenditure, for consumption expenditure or saving during a year. Saving during a year. Okay, for understanding, I can say that. Just imagine hereafter for income we will use The letter Y. Clear or not? What is that? Y. Clear? Y is always is equal to S plus C. What is that? S plus C. So income is also is equal, sorry, always is equal to saving plus consumption. Clear or not? So an individual household will always save money for the future. So income is equal to savings plus consumption. Savings plus consumption. Clear? For example, income is rupees 100, okay, is equal to, what is the saving? Just imagine 30 rupees he saved and the balance 70 spent. Clear? Okay, so income is always is equal to savings plus consumption. Savings plus consumption. That's what the idea here. Available to the resident of a country for consumption expenditure or saving during a year. Okay, saving during a year. Okay. Net national product for factor cost is, sorry, net national product for factor cost. There's a equation, okay? Plus net indirect tax plus net current transfer from abroad. Net current transfer from abroad. Current transfer from abroad is equal to net national disposable income. Is equal to net national disposable income. Okay. So net national disposable income is equal to, what is that? What is that? That is gross national disposable income includes a depreciation. Write down that too. Bracket. Gross national disposable income includes a depreciation. Includes depreciation. Okay. Completed.
Yes, sir.
Okay. Moving forward. Next one, we know that the private income of the individuals. Private income, right? Each and every individual, they are earning money, right? So calculation of private income. Calculation of a private income. Okay. So private income includes factor income as well as transfer income. Private income includes a factor income as well as transfer income. So what do you mean factor income? The private individuals are able to provide these factors of production to the firms. So they will receive what they receive back, factor income in the form of factor payments, factor income, as well as transfer income, that is unearned income. Okay, what is that? Unearned income. So bracket you can write. So factor income is earned income, transfer income is unearned income. What do you mean unearned income? Unearned income. Any ideas are there? So pension that receiving by the people in the country, pensions. Are they receiving that for doing something? Tell me.
No, sir.
Not at all. And if you are a parent, those who are working abroad, they are remitting money to India, right? Sending money to India. Okay. I want to resend it back or want to do something to get that money? No. All right. Right. Clear. So such kind of income is termed as unearned income. Unearned income. Okay. Basically, you are not you doing anything for earning that. So write down. Factor income from net domestic product. Factor income from net domestic product. Factor income from net domestic product. According to private sector, according to private sector, according to private sector, includes underline includes income from enterprise owned Income from enterprise owned and controlled by the private individual. Income from enterprise owned and controlled by the private individual.
So transfer income can be happen as in donation or charity also, no?
Of course, because we are not doing anything to earn that, right? Okay, in
Yes.
return, we don't want to do any services for them, right? Okay, so that was an example for that. Okay, right on. Factor income from the domestic product acquiring private sector includes income from enterprise owned and controlled by the private individual. Okay, excludes first of all one, property and entrepreneurial income of the government. Government departmental enterprise, government departmental enterprise. Okay, we will discuss what is the government department enterprise. Please write down now. Property and entrepreneurial income of the government department enterprise. Second one, saving of the non-department enterprise. Non-department enterprise. Actually, here you have to write departmental enterprise. Okay. The next sentence. Factor income from NDP according to private sector. This equation. Factor income from NDP according to private sector is equal to net domestic product for factor cost. So here like FC and MP, sorry, yeah, FC and MP, always you have to write in a subscript there. NDP FC, okay, subscript, okay, NDP FC minus income from property, income from property, entrepreneurship, entrepreneurship, according to the government department enterprise, according to the government departmental enterprises minus savings of non-departmental enterprises. Savings of non-departmental enterprises. Okay, so just keep this idea in a box there. Okay, after discussing the three methods of calculation, we will discuss this one. Okay, so just draw a box and keep these ideas within that box. Okay, calculation of private income. Done. Okay, so already we wrote that. You just wrote this one. Write this also. Private income includes factor income from the domestic product accruing to the private sector plus net factor income from abroad plus interest on national debt plus current transfer from government plus current transfer from the rest of the world. It's the equation for that. Components there basically for the private income. Private income, sorry, factor income from net domestic product accruing to the private sector plus net factor income from abroad plus interest on national debt, interest of interest on national debt plus current transfer from government, current transfer from government plus current transfer from the rest of the world, current transfer from the rest of the world. Completed. Will you finish it? Finish it.
Yes, sir.
Okay, next one, calculation of personal income.
So
Calculation.
can you show the previous slide once
Yeah,
again?
sure. Don't worry, don't worry. Things here, I said, yeah.
Okay, sir.
Yeah. Everyone completed? Aditya, Amalraj, Saratanil, Anjo, Sibi, Grishma, Pavitra, Anila Mohanan, Ashwini. Only 13 students here. 10 are absent, I think. Okay, next one, calculation of personal income. Personal income. Okay, personal income for a particular individual. Personal income is the income actually received by the individuals and households from all sources in the form of factor income and current transfers. So personal income is equal to private income minus corporation tax minus corporate savings or undistributed profits. Right. Okay, in the coming classes, one by one, we will discuss all these things there. So this chapter will take much time to more time to complete actually. Okay, the allotment for this chapter is nearly 20-25 periods. That many periods we needed to complete this. So don't think that we are moving very slowly. Okay, so the things are a little bit hard for you people. That's what will take some time. So just complete the notes there. You know, if you simply I'm explaining means you will not listen also. That's what I'm making you people to write also. Okay, write that and keep the notes with you. So every day, a few students, example, I can say that it is Abarna, it is Aishwarya, it is Aditya, it is sometime Anjo, Hanna, Karthik, okay, Amal. They used to send the notes regularly. Even Grishma Joshi, Anila Mohanan, alternative days. Okay, most of you people are not sending the notes. Okay, so I want to see that whether you are writing or not, what you are writing there. Okay. So some notes I already received so far. I checked that I may find number of errors and mistakes there. That's what again I am showing these slides for you people there. Okay. Any errors are there, please correct it. Please correct it. Okay. Okay. Next one. Calculation of personal disposable income equation is here. Personal disposable income, I
Sir,
told you that. Tell me.
can you show the previous slide?
Yeah, 1 minute. Yeah, here it is.
Okay, sir.
Okay, everyone, moving forward. Okay, next one, personal disposable income. I already told you that what is personal disposable income. Okay, so personal income minus direct personal tax, which means the income tax, minus miscellaneous receipts of the government. Government will collect various types of cesses from UB people directly. Okay, indirect taxes are there. So administrative departments fees and fines paid by household. Okay, administrative departments, we know that police, health, like that various departments are there. Their fees and fines. If you are not wearing a helmet, we know that, right? Hmm? The police will penalize. I mean, you have to pay fines there. So that all including what? the receipts by the government. Yes, government will receive all this money. Okay. So personal income. So personal disposable income is equal to personal income minus direct personal tax, that is income tax. Okay. Minus miscellaneous receipts of the government. The government will collect money from the people in various ways there. Even if you are purchasing a lottery, also government is collecting money from us. Right or not? Right or not? So lottery tickets. Hmm? Lottery tickets. So all other state governments will blame the Kerala government. What is that? Kerala government have two techniques to make money. One is the lottery, other is Beverage Corporation of Kerala. Okay, these are the two techniques basically Kerala government or the finance minister is using to make money for running the administration or running the government. Okay, so Bevco, you know that you can find a long queues on the roads there. Somebody we think that it's a festival or something. It's not that. The people are waiting for the or waiting in that queue for purchasing liquor. Liquor shops are there. State operated as state owned liquor shops are there in Kerala. Okay, next one lottery. If you're a walking in 1 kilometer, just walking 1 kilometer, you are able to find 3 to 4 lottery sellers. Clear or not? Yes or no? Of course, we are able to find in Kerala. Okay, because we are purchasing lottery. Actually, the government is cheating us. Okay, the technique of government to collect money from we people. Okay, clear. So we will purchase the lottery ticket for 40 rupees. Okay, and government is using a little amount or a very small percentage to give the prices back to the people, those who got that lottery, really speaking. So clear or not? So that kind of things are there. That also a method of the government to collect money from the people. So that money is collected by the government. We cannot use that for our purpose, right or not? Purchase a ticket, lottery ticket for 40 rupees, government collected that from us. Again, are we able to use that money for some other purpose? Not at all. Gone. Okay, clear or not? So that also coming under this kind of collection of the government. Okay, so personal disposable income is equal to personal income minus direct personal tax minus miscellaneous receipts of the government. Okay, miscellaneous, various ways they will use that. Administrative departmental fees and fines are there. Fees and fines. Okay, so for the KCB we are paying money, for KWA we are paying money, right? What is KWA? In Kerala. KWA, what is that? Okay, means Kerala. Right. What is WA? No idea. Water Authority. Kerala Water Authority. Okay. KCB. Tell me what is KCB? What is the full form of KCB? Good. 12th class students, commerce and humanities students don't know the full form of KSCB. What is that?
Kerala
Shubhambal.
State Electricity Board.
Kerala State Electricity Board. Shubhambal in Delhi. What is the name of that?
Yes,
Hmm? Which company is providing electricity for your houses?
sir, I can't hear your voice.
I know that. It's very difficult to hear, right? Can you hear me now? Okay, everyone. Thank you very much. Anyway, the time is 9:31 now. So it's a time to wind up the session there. So we will meet in next class. So hope all these slides you wrote properly, learn it properly. I mean, okay, read it properly. Next classes we will discuss one by one, and the calculations are very much important for us too. Okay. Okay, everyone. Thank you. Have a nice day. Humanity students, we have one more class today. Okay. Bye. Thank you.